Welcome to TradeNameGuy.com. This is John. This report is for the 20th of June. Well, we'd been looking at this weakness. We'd expected some kind of movement towards a lot of these support levels here of the ABM, and sure enough, we got pretty much a test of each of them. Came below the 61%, which has been rising since, well, right over here. We can see that we have rising lows, which is kind of wanting to pull price down towards that 50% a little bit. But we ended up moving back above it, and once we got above it, we just kept climbing through the pain, so to speak, and even now we're still, even with the drop and shakeout, holding up quite extraordinary. In fact, we're above the ABM yellow at this particular point. If we put the values up there, which is 71.50, and we had 53, 59 for the magenta, and each time we came to each of those setups supported, and the power was really in the NASDAQ, because the NASDAQ was far stronger, barely even made it to the magenta on the retrace, and has really been powerful. Now it is producing what we would call a DOC spread right here. Just created that at the end of the close there, and now we're going to see how much strength. Now here's the interesting thing, because you get the closing of the orange and the rising of the steel. So that closing of the snake mouth that we talked about, that started back over here, kind of elevates price a little bit. What will happen is if it gets a little closer and then it breaks away, that will lead to the downdraft. So it's one of those, it's kind of like, yes, you can be within the sell signal and not quite see the reaction to it yet, but it still potentially exists there. The euro, no surprise with this move back to the lows. We see the positive extremes that developed early on, even below the 38% was touched. It was touched briefly, and then literally we revisited the lows here. Still don't have a buy from that standpoint, so it can still move. And all it is, we're going back into this historic normal range. We've been outside of it with some propping by central governments, but the U.S. Fed doesn't see the need at this point to elevate the euro with the amount of growth that's taking place, because they'll save it for another time. And of course, whenever you get market volatility like that, you get a flight to quality in the treasuries, except for the problem is with the inflation that we're starting to see. Yield on these things not so great, which is kind of problematic. But what do you do when you want to flee equities because you're concerned about capital reduction? That's where you put your money, and that's why sometimes it seems odd that it'll be the attractant, but it's where things are, because we haven't been seeing commodities move at all. Gold has been moving counter to what we see from inflation. So is oil. In just that we have plenty of a flux. The biggest problem is on the refining side of it, as we get to meeting demand that way. But certainly from a supply standpoint, it's not a problem. This is still pretty decent price, and if it stays in these areas, I think it's healthy enough that it doesn't create too much of a bottleneck inflation. We certainly still aren't seeing inflation from a labor standpoint, which is the key. Once we see wages rise, then you know that it could be pretty dramatic, a pretty quick move. And look at this from gold. It's been in the sell. Hasn't changed. We've seen no reset. Geez, all the way back, right back here. Once we ended up with the DOC spread, we came up above. Once we were in the flat plateau, but from an overall sideways down, which is what this has been, consolidating, we've had no reset of short-term buyers wanting to elevate it at all, and that's pretty much kept it in a static zone. All right, so this is an intraday. Look at this setup. So we had it from back over here. We'd already had the 64 value, and that was from a previous white candle from back before. And once we got the DOC spread that started right up there, we had a little bit more of a peak move, and then it broke down. So fine, we hit that target pretty darn fast, but it was still within a pretty big sell signal. And then we created a new white candle, which gave us 52 as a marker, but we already came down. And then we briefly popped up above it. We got this gold candle below the 50%, so the little pop to the 50% we didn't expect to hold very much, though it did a pretty decent job. We got to the 50 here, and then we started having the lows rising in that as much as it was trying to pull price down, we had a pretty significant increase, and this was that buying that we started to see on the NASDAQ and everything else. Right around the 50 is always a critical one because it dropped off so dramatically, and then we ended up with this beautiful gold candle right at the 52, above the 50%, and that led to the highs, just like we would have expected. Then we revisited the 50% again, rose up again, and in this particular case, after the little blue candles and the rise there, we got a shakeout reset, and we did get a gold candle above the 50%, so we were expecting those highs to come back again. And interesting, though, that it's right at this convergence point, a little bit below the 52 to 64 range, a little bit above it, and you get pretty much a consolidation. Now we broke back above the that 64 range. We don't have to revisit these any longer. That doesn't mean that they won't be magnets, and it's always worth, in my mind, having them on there. Let's increase this because we don't really see the other part of that. We can get a little bit tighter into what the action is right here. Makes it a little easier. So you see how choppy, though, we've become with the shakeout. It's not developing that consistency, which is good because it gives you those nice retraces within a broader play, an opportunity to get discounts. Because, you know, in this situation, when you're breaking down below the 50%, you can put your 50% as a turnaround buy. And some people say to me, yeah, but I didn't have a buy signal there. Well, no, you don't necessarily have to in some of those cases where your expectation is for a broader move. And in this particular case, you're looking at the daily from those very ABM values becomes, like we talk about, a buy above range construct. Now, would I prefer when you have a situation like this where you get the gold candle that comes in above and then you get a nice little retrace? It's like you're still looking for that peak to be hit. And then it becomes a little bit more effective. In this particular case, there wasn't a whole lot there, and by the time you got the actual turnaround, we were already back up to the 61%. That didn't mean that once it dipped below the red line, we still weren't in a continuation mode, which is exactly what we are. Though we can see that we've got positive extremes on this, so we're likely to get retraces. What's the low with this bar? 67-ish from 73. So there still could be some decent pullback move, even within this broader long setup. So it's worth noting. Always good to be able to follow that. And this was pretty clean from once these buys started coming in with the rise and shakeout. But it still left plenty of opportunities both directions, which I like. I think that if you stay nimble with it and don't get caught in a prejudgment that the world is ending or that there's pure euphoria, then you'll be effective with being able to move up and down with how things go. It's still a fairly decent range. I mean, we were in the 20s by the time we got up here. Right now, we're right about 21 for an overall up and down range. All good. As always, though, trade well, and we'll talk again later. I'll put up additional charts on the Skype chat as needed.